I think the crypto winter is it's either ended already or the latest is April. So I think we're almost through the winter. When spring comes, crypto spring comes, right? One reason gold goes up is monetary easing. That benefits crypto. A second is geopolitical uncertainty. That benefits crypto. The third is dollar devaluation. That benefits crypto. I think there's rage quitting taking place, which is a good sign, because that's always a sign of a bottom, right? Take every drawdown in Bitcoin, you know you're at the end when people give up on Bitcoin. And this time they're talking about quantum and Bitcoin's broken, or like gold's been a better store of value. So I think people are quitting.
In the current macro landscape, few voices in the institutional investment world articulate the intersection between equities, monetary policy, and crypto as clearly as Tom Lee. His thesis is neither emotionally driven nor anchored in short-term price fluctuations. Instead, it is rooted in business cycle dynamics, monetary policy shifts, inflation data, and historical precedent. Lee's central argument is straightforward but profound. Risk markets are positioned to perform well this year. Volatility is inevitable. Turbulence is part of every cycle, but the structural backdrop is improving. A dovish Federal Reserve, a turning business cycle, and cooling inflation create the kind of macro alignment that has historically favored equities and crypto alike. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
I mean, to me, I think risk markets are going to do well this year. There, of course, is going to be turbulence just like last year, but one, the most important is there's a new Fed. That's going to be dovish. The business cycle is definitely turning because the ISMs finally broke above 50 after 3 years below 50, the longest stretch in history. Inflation is cooling. We'll get another inflation report on Friday. But, you know, on core CPI year over year, after Friday's report, it's going to be the lowest inflation rate since COVID. In fact, it's back to pre-COVID levels, 2.5%. So I think if we've been worried about inflation, that's really receding. We have a dovish Fed and the business cycle's turning. I mean, that's good for risk assets. And historically, that would be good for stocks and, of course, good for crypto. I think the crypto winter is it's either ended already or the latest is April. So I think we're almost through the winter. When spring comes, crypto spring comes, right? I think a lot of people have FOMO around gold because gold's done so well. Gold now, though, has gotten so big. I don't think people realize this, but gold's network value is 40 trillion. The S&P 500, excluding the Mag 7, is 40. So gold is equal to the size of the stock market. Gold is twice as large as Europe's stock market now. Here's the thing. Gold's intraday move on January 31st was 5 trillion swing. That's 4 times bigger than Bitcoin right now. So I think gold has gotten so big. Well, one, that's why people have been buying it. But it's gotten so big that I think it's hard to argue that it's going to keep doing well. Because if gold doubles in price now from here, and some people are saying gold can get to 10,000, then it's twice as big as the S&P. At Fundstrat, we wrote a research report, like looking at the 5 reasons gold can go up. But of those, 2 of them would be bad for crypto. So one reason gold goes up is monetary easing. That benefits crypto. A second is geopolitical uncertainty. That benefits crypto. The third is dollar devaluation. That benefits crypto. But the next 2 don't benefit crypto. One is price momentum of metals. That creates FOMO. That's bad for crypto. And the last is if the monetary system is being questioned outright. Like if someone says, you know, all fiat currencies are going to break down, that's really bad for crypto because crypto is digital money.
Yeah.
Whereas gold is outside the monetary system. So I think part of what's happened is metals have gotten so much momentum. And then all this talk about Japan and the move in the rates there, the surprise with the new Fed, all of that made people nervous about any monetary system, and that's why gold basically went up a lot. I think there's rage quitting taking place,
Yes.
which is a good sign because that's always the sign of a bottom, right? Take every drawdown in Bitcoin, you know you're at the end when people give up on Bitcoin. And this time they're talking about quantum and Bitcoin's broken, or like gold's been a better store of value. So I think people are quitting. In the traditional finance world, there's more people saying they're glad they don't own Bitcoin versus finance people who own Bitcoin and are losing money. So to me, it's still a sign we're early because one, people have looked at the Bitcoin decline as proof they shouldn't invest in it, which I think means we're still early. It'd be different if people in finance were losing money in crypto and like rage selling it.
Yeah.
But the rage selling's happening more in the crypto world. Last year, I think crypto felt like a second rate story versus AI.
Yeah.
Right? Because people were buying anything AI related, data centers, even the Bitcoin miners. And then gold was just rising through it all of last year. And then suddenly gold really broke out to new highs and then went basically parabolic. And I think that was really painful for crypto people. I think that's more signs like that we're at the end of the selling, not the beginning. Because one, gold has not been a great store of value in its history. Actually, we just wrote a report on this at Fundstrat that since 1971, if you look at 3-year returns, gold has underperformed inflation 48% of the time. So in other words, if it's supposed to be a store of value, it should be outperforming inflation all the time. But half the time you own gold, you've done worse than inflation. Since 2010, when Bitcoin was first created, Bitcoin's outperformed inflation, even after the bear markets, 97% of the time. Gold has only beaten inflation 54% of the time since Bitcoin was created. So actually, Bitcoin's still been a better store of value relative to inflation. And even in the last 3 years, Bitcoin's beaten inflation. So, gold maybe looks better for the last few months, but I don't think that really means Bitcoin's done.
Lee distinguishes sharply between Bitcoin and Ethereum versus the broader crypto ecosystem. He highlights that only 2 major publicly traded entities have been consistently accumulating crypto during recent weakness: MicroStrategy for Bitcoin and BitMine for Ethereum. Most other corporate holders have either paused buying or sold holdings to fund operations. Lee positions BitMine as structurally differentiated: no leverage, substantial cash reserves, daily income generation from staking and interest, and flexibility to deploy capital opportunistically.
We're going to rise and fall with Ethereum. I mean, basically, BitMine is a stock that's adding Ethereum every week. So if Ethereum goes down, BitMine stock is not going to go up, but it's going to outperform. Like, for instance, even in 2026, Ethereum's down 32%, BitMine's down 21%. So BitMine's outperforming Ethereum. Last year, from June 30 to the end of the year, BitMine was created on June 30th. Ethereum was up 22%. BitMine was up 500. So BitMine is outperforming Ethereum. But I think we're doing the right thing. One, we have no leverage. We've been keeping a big cash position. It's like around 600 million. And we're basically earning money every day. The staking rewards plus the interest on the cash is about $1 million a day in profits. I think we're half of the staking queue. Yeah, no one wants to get out of Ethereum.
Yeah.
In fact, basically and we still have another 1.5 million on top of that to stake. So when we fully stake, we're taking supply out of Ethereum too, permanently. I think anyone who's new to crypto should keep in mind, every bottom is V-shaped.
Yeah.
So there's not been a single Bitcoin bottom that wasn't V-shaped. So if you're trying to time the Bitcoin bottom, and if you don't get it right, you've missed a big entry point. So it's actually better to hold it into a downturn than to try to time it. And the cash balance is growing, so we could be buying a lot more Ethereum if we wanted. Well, there's only 2 DATs that are kind of dominant, right? MicroStrategy for Bitcoin, because they have 700,000 Bitcoin, and then BitMine, which has 4.4 million ETH. And then the next largest DAT is 1/5 the size. So I think everything else is, they're not necessarily differentiated stories anymore, because if you're not the largest DAT, and if you don't have a clean balance sheet, because we have a clean balance sheet and we have a lot of financial flexibility. We have so much cash that we can write a $200 million check into an investment. we are in a maximum flexibility position. Like, so if Ethereum has a big decline, which I don't expect, so because I think we're close to the bottom, but if Ethereum had a big decline, we could, put $600 million to work that day. It is interesting that since October, so in the last 4 months, only 2 DATs have bought any crypto.
Really?
MicroStrategy and BitMine. And we each bought about $2 billion. But everyone else has either been not bought a single crypto, or they've been selling. There's been 5, I think, that have sold crypto.
Yeah.
So I think if there's any unwind, it's probably the smaller DATs that have to raise money for operations by selling their crypto. Whereas BitMine expenses aren't that high, and then we're making $1 million a day, right? So we're never really in a position where we have to sell any Ethereum. I think we were very clear and committed to our shareholders that we'd only raise money when it was going to add. So we're only raise money above MNAV. So I think people trust us because we're like the only other DAT that's still trading above NAV. Yeah. So us and MicroStrategy are only 2 that trade above net asset value. And we've been transparent. We do weekly updates. We record a monthly video. So I think we've been really transparent. And I think our strategy has resonated not only with individuals, but with institutions, because, we have some really big shareholders now, like FAROKH Asset Management, and we have Morgan Stanley's a big holder. So if you look at our shareholder list, it's some of the top institutions, plus, of course, a lot of individual investors too. We're going to track ETH, so we have to buy it. We raise money, we buy it.
Yeah.
So if ETH goes down, it's actually kind of obtuse if someone's wondering if ETH prices are lower, because it's like an ETF. The ETFs have ETH, they raise money, bought ETH at 4,000. ETH is at 2. It's not like an ETF says, oh, their strategy's wrong. They're designed to track the price of crypto. We wouldn't be as big as we are if we just sat on cash. Imagine if we never bought ETH. Then they're gonna be like, so Tom, you sit on cash. Why would we give you more cash to sit on more cash? Also, no one's paying us to trade crypto. If we sold ETH, we're not a DAT. So there's nothing we can do except outperform Ethereum, which we have. When we created BitMine, we said we were going to dedicate 5% of the balance sheet to moonshots. So roughly $750 million. And we wanted to invest in things that would strengthen the Ethereum ecosystem. So to us, an investment into Beast Industries was a really logical moonshot. MrBeast himself is the biggest content creator in the world. He has 1 billion followers, more followers than anybody in the world. His YouTube content is watched more in total every month than Disney's entire streaming platform or Netflix. So he's got huge viewership. And in fact, his viewership is equal to 2 Super Bowls every month. He also has a huge collaboration network, global content partners. So he's got enormous reach. And of course, he's really interested in financial education and really working with Gen Z and Gen Alpha. I mean, he is the single person that's the most influential in that group. So for us, when we think about people's financial journey, the next wave of people entering crypto are going to be the Gen Z and Gen Alpha. And we knew that Beast was going to be eventually invested in the financial services area, which they announced this past week that they just acquired a neobank. It makes perfect sense. Ethereum is a very complementary to everything that Beast Financial Services is going to do. We're a good natural partner for this idea of financial education, teaching young people how to invest and save. But again, he has a reach of 1 billion people. So to us, I think that's going to really strengthen Ethereum in the future. I mean, we should be pretty close because, one, I think sentiment is terrible. The price action's been bad. Tom DeMark, who is our advisor on timing, since November, he's been saying Bitcoin would get towards 60 and Ethereum he thinks should bottom. Well, originally 2,400, but he says if it didn't hold there, Ethereum would bottom around 1890. So I think it touched it to the penny. He thinks we just have to undercut it once more, and then that's the low. Meaning we're really close to the end. But Sentiment seems a lot worse because it's happened in such a short period of time. And maybe it's happened without a bubble first preceding it, right? So we didn't have like some major parabolic rise before crypto prices started falling.
Tom Lee's thesis rests on alignment. The business cycle is turning upward. Inflation is cooling to pre-pandemic levels. The Federal Reserve is shifting dovish. Gold's momentum may be peaking relative to its scale. Sentiment in crypto is deeply pessimistic. Technical signals suggest proximity to lows. When macro, sentiment, and liquidity cycles converge, inflection points emerge. Lee is not dismissing volatility. Turbulence will persist. But structurally, the environment increasingly resembles early cycle expansion rather than late cycle contraction.